All right, folks, back to work. Boy, markets obviously love what they saw from that CPI report this morning, right? Big move higher almost the entire day today. I'm sure by now, everyone's waiting to buy a pullback tomorrow, but you know by now, right? Pullbacks, they sound so easy. Just buy the pullback, just buy the dip. But if you have any experience at all, buying pullbacks, buying dips, it's more difficult than it sounds. It's difficult to pick the right pullback, the perfect pullback entry. So in tonight's video, I want to share some tactics, some tricks I use to pick the perfect pullback entry. That way you can make some money picking pullbacks tomorrow morning as well. So charts are ready to go here tonight. Enough of the intro. Time is ticking. Let's go find some perfect pullbacks tomorrow. Make some money on what should be a great Thursday morning in our trade room. S&P and SPY is ready to go tonight. You can see there, NASDAQ, triple Qs are all ready. I have 4 very simple but very important clues on these charts that are telling me where I think the winning trades are waiting for us tomorrow. One of those clues is right here on these hourly time frames. It's very obvious to see the buyers are back in business as far as the overall momentum goes. Look at the size of that move higher on the NASDAQ. You probably don't need me to tell you this right now, but we're definitely a bullish overall market. Now, I like to use these hourly charts as a bit of a directional filter, the long-term trend directional filter we use in our trade room. But the one thing these hourly charts don't do is they're not going to help us time the entries. And if we want to pick that perfect pullback entry for tomorrow, we need some faster time frames, some tick charts. I have 3 more important clues on the tick charts. We're going to grab those in a moment and talk about timing the perfect pullback entry. Before we do that though, let's check schedule for tomorrow. There are 3 things on my radar for tomorrow. First things first is the ECB announcement will be tomorrow morning, usually sometime around 8 o'clock Eastern time. So be aware of that. If markets are acting a bit squirrely in the pre-market tomorrow, ECB is probably going to cut rates tomorrow morning. The big news tomorrow morning, obviously, is that PPI number, the producer price index. It probably will not be as dramatic of a reaction from the consumer price index, but nonetheless, though, it's something we're watching tomorrow morning in our trade room. And also, third thing for tomorrow, don't forget, this is the final week of our video newsletters on this YouTube channel for the year 2024. We'll take a few weeks off into the end of the year. We'll come back first full week, January 6th. So make the most of these videos. We'll keep posting shorts and we'll keep posting tweets. We'll take a break from these long form videos. So make the most of this week's video newsletter. Let's get back to our charts though. The money is made on the charts. I mentioned earlier, I have 3 probably more important clues on some faster time frames. It's easy to see right now the market's overall bullish. We've known that pretty much all week this week. Let's drill down though now to some tick charts. You see, tick charts are based on volume. They make pattern recognition a whole lot easier. So if you want to pick better pullbacks, get yourself some tick charts. This is a 7,000 tick chart, all the time frames you'll need in the upper left-hand corner there. And if you're watching for the first time right now, this is the 21 EMA. As you can see, it's pretty much the only indicator we use to find lots of winning trades each week. Boy, first things first here, on a side note, whenever we see a news spike, anytime we see a strong spike off news, you can take the news spike and double it up to find a measured move. Kind of a fun fact there, whenever you see a news breakout like that, the breakout leg, the news spike leg helps you find that measured move. It's kind of a fun fact there. Now, there are 3 more important clues though here on the tick charts. One big clue is speaking of big, it's a big move higher. Now, anytime we see a big move in one direction, I don't want to buy high, I want to buy low. And to buy low, I always look for a 2-legged pullback. Think about a measured move, right? Measured move and a retest of the high. Big moves tell us buy low. When I say buy low, I always think about a 2-legged pullback, right? Think about a measured move going lower here. That's one big clue on the tick charts here. The next clue here is a range breakout. We had a range, right, 24 hours ago. We see a break out of that range. And I'll tell you, one of the most consistent things I know about technical analysis is range breakouts. They love to break out and pull back. They break out and pull back. So I'm keeping my eyes on this area right there for basically a breakout pullback off of that trading range. And the final clue here is maybe the most important clue right now. We have a new trading range up there. Why would that be an important clue? Well, because ranges like to rotate, right? They go down, up, down, up, back and forth. We like to use things like pendulum swings, measure the amount below, measure above. I like to use triangles, right? Expanding triangles or megaphones. Ranges, like back over here, right? Ranges, they love to rotate back and forth, right? Breakout, pull back out of that trading range. So putting all those clues together, I have 4 trades here on the S&P and SPY. I'm also talking about some variations of these trades on the NASDAQ a bit later on, because the NASDAQ does not have this range. And so I want to make sure you're ready for if we do see a range, the NASDAQ. We'll cover that a bit later on in this video. You'll notice right away here, I've marked up kind of that 1 leg, 2 leg. I like this area right around that 82.25 area for that 2-legged pullback. Really at this point, I've got that bull channel coming off that low. That's a great level of support. I've got that support level, that support level. So anywhere down in this area would be a great spot to pick kind of the perfect pullback. Now, when it comes to picking pullbacks on this, I don't like to blindly try to pick what the bottom is. When I say perfect pullback, we're actually not looking for the perfect bottom on this. What I'm going to do is once it pulls back into support here, I'm going to wait for the pullback to the moving average and let the bears come in. Let them try once. Go higher, try twice. Why twice? Because now, I don't need to pick that perfect bottom. Once those bears get in, now I know where their stops are. Now I know where those sellers are in pain. Now I know where sellers are forced to become a buyer, and we can squeeze those stops running higher. Like back over here, right? Run it lower, bears once, go higher, bears twice, and squeeze those stops running higher there. Now, at this point, where does the market want to go? It doesn't just want to go back and retest the high. It wants to go back to retest the high, but what does a range tell us? A range tells us to expect rotation. The amount below, the amount back above, right? That symmetrical rotation. So as we go higher here, what I can do now is add to my winners. And whenever I want to add to my winners here, I want to buy as low as I can. To buy as low as I can, I always use what's called basically a technical, in this case, a bear trap pattern. It's a higher high in price and right below that low. In my trade room, I call these a failure, a 2-try failure, 1-2 into a trap combination. Remember, on these trap combinations, you want that separation away from that moving average, that higher high in price, and you want to get right below that low. Nice strong green candle closing above that 21 EMA, and we're off with that rotation. Again, we'll take a bit off at the high, mark that low, mark that high. That becomes your final target as it likes to rotate. Now, one really cool thing about this range rotation is that now, if we do get something like that, where we trap those bears in once, twice, and we get that nice strong run going higher, what's the next trade now? Well, now this is a trading range, right? So what do ranges do? They love to, you got it, they love to break out pullback. Now, when I say breakout pullback, I always like to look for that 2-legged pullback, right? So 1 leg, 2 leg. It's not required. A lot of these will not give you 2 legs, but these are always the primos, right? So 1 leg, 2 leg. Try to line up that 2-legged pullback along with what was resistance now becomes support. And what I'll do is, again, I'm not going to pick a bottom on this. I'm not in the business of picking the perfect bottom. It's very difficult to do that consistently well over a long period of time. I would rather wait for that pull back to that 21 EMA. Let those bears try a couple times. Make sure you get the higher high in price. Higher high in price, always a higher high, because sellers want to sell high. Once those bears are trapped in, then it's going to be that failure into that trap combination. Targets are off at the high of day up there. But remember, anytime we see, let me mention over here, anytime we see a big range breakout, the size of that breakout leg is then used as a measuring leg for a final target going higher. If you want to make more money, get better at leaving a little piece as a runner. One well-placed runner can make your entire week. Now, I want to talk about some variations down here. What if we don't get that bear trap down? There's a couple of variations I want to talk about there in a moment. Before we do that though, if you're watching for the first time right now, I know most of you folks watching right now, you know these patterns already. You're making money with these already. But listen, if you're here for the first time right now, this might be a brand new language, a brand new strategy. What the heck are traps and failures and 2-legged pullbacks? I get it. It's a brand new language for some folks here. So if you want to learn more about this, I teach the entire system. In fact, I have hundreds of examples of failures, traps, two-legged pullbacks. I cover so much more of this in our free video classes. What I'll do is I'll put a link up top there for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video course will teach you a simple trick we use in our trade room each morning that tells us exactly where the winning trades are going to be. More importantly though, I want to teach you my 4 favorite entry setups, things I'm talking about in tonight's video, so you can time better entries, make a lot more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves all the trade examples I share in that short video series. The best part is it's 100% free for you. And also be aware too, if you can't get the link that popped up there, I'll put all the important links you'll need down in the description of the YouTube video. Definitely start first on the free video classes. Most folks start making money on their own with all the free stuff I have on the website. So start there first. And don't forget too, we trade together every morning, 8 o'clock Eastern time. I'll put trade room info down there for you. And if you're on Twitter or X, I post a lot of charts and videos and mindset stuff on Twitter X. Give me a follow. You'll love that feed on Twitter X throughout the trading day. So now you know more though of where to get more information, learn the entry setups, see more trade examples, everything we're talking about here tonight in this video. So where did we leave off? Oh yes, I talked about running lower, getting into some of these key level support here, trapping these bears in and squeezing those stops back up again. Not picking the perfect bottom, but the perfect pullback is trapping those bears in, squeezing those stops, running higher. Now, what if we don't get it? You know, oftentimes what happens is, unfortunately, sometimes we get a nice deep pullback and there's so many buyers down here, it just whoop and runs right back up into that range overhead. What do we do in situations like that? Well, first of all, we don't pick the bottom and we don't chase after it. If it V-bottoms off that low, it'll almost always begin to grind going higher. That grinder is a big giveaway because now I can mark a trend line off those highs. I can anchor that trend line off that recent low. That creates a new bull channel. Now watch closely here. I'm gonna look left, find some of these prior swings. What I want is I want to get the entry around that prior swing. The magic happens when you go right below one of these prior swings and it lines up right around the low of that channel. In my trade room, I call these first test traps. The first test is the best test. It's the first test of below that channel, and it's a trap. It's right below that low. Now, I'll admit, we don't always get traps in our trade room. Oftentimes what happens is we get underneath that moving average. The bears will come in. They'll get short off that 21 EMA. I'll use their stops to fuel the move higher with a failure pattern going higher. We see a lot of failure patterns each week in our trade room and get a lot of examples of those inside the free trading course. And once again, don't forget, let those winners run, right, with that range rotation, that pendulum swing going higher. One more variation. I'll make sure everyone knows the game plan. We'll grab the NASDAQ here in just a moment. Now, many times, a lot of times, very common, we'll get a big move down. I'll get that 2 tries for the bears. We'll squeeze those bear stops and run back up again. Happens a lot in our trade room. They're going to hold the underbelly of that range because, again, ranges love to break out, pull back, and they'll make another leg going lower. This is a winning trade, right? Look at our 1-to-1. I talk about how we use volatility to find stops and targets in our free video classes. So this will be a winning trade. These are the first targets, pretty easy to hit on these types of winners. But for whatever reason, right, they'll hold the underbelly of that range and we'll go back and take out that low. Oftentimes too, this becomes 1 leg, 2 leg down right below that low. So be aware of that. The bottom line is though is that this right here is a horrible spot to be a seller. If you want to sell high, right? Don't sell on a retest of that low, not after a big move higher in an overall bull market. So if this is a horrible spot to be a seller, it's a great place for, you guessed it, a bear trap. Now, bear traps, they come in different shapes and sizes. One variation of a bear trap I use often in trade room is a 2-try failure. So again, I'm not going to pick the bottom on this. I'll wait for bears to try twice Remember, higher highs in price. Why? Because sellers want to sell high, bears once, bears twice, buy into those stops. And then now, here's the key. The buyers want to go back and take out that high right there. I want to add to my winner before I get there, right? Very important, before we get there, right? So as we're going higher, what is the one pattern we use to add to our winners or get in altogether? It's always going to be that separation of the moving average. The key is that separation off the moving average. Separation equals strength. Get that higher high in price, go right below that low, and that is your trap entry, a technical trap like I teach in the video course, right? So a failure pattern into a bear trap combination. I want in on that bear trap combo before we take that high there, leave that runner back up to retest that high. Those are a couple of my favorite trades here on the S&P, SPY, and some variations of that. And again, that breakout pullback, if this thing really blasts and run higher. Let's grab some NASDAQ though. NASDAQ, man, oh man, NASDAQ obviously loved what they saw today out of that CPI report, blasting all the way through that recent all-time high. Now, I want to talk about NASDAQ. Before we do that though, let's slow down. If you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this video link with other trading buddies, because YouTube rewards me every time you like and subscribe. I know we're all busy people these days. It's holiday season. I know times are really busy right now, so I appreciate you guys spending a few minutes with me every evening on these videos. So thank you so much for the likes, subscribes, the shares, all the support. Now, let's get back talking about NASDAQ and make some money on the NQ tomorrow. NASDAQ obviously is a big bull market overall. Remember, I like to use the hourly chart as just an overall directional filter. I'm not going to get too far into the weeds on the higher time frame. We'll get into the weeds on the faster time frame. This, by the way, is a 4,000 tick chart. The NASDAQ is a bit lower volume than the S&P, so because of that, we use a lower tick chart value. You can see right away here, right? There's that range breakout, that spike up, right? Anytime we see a new spike, take the new spike, right? That's the measuring spike. If you want to make more money, get better at holding your winners. It's another easy technique to know where your winning trades want to go if you're jumping in on bear traps during that news spike. A fun fact there, right, for how news breakouts work. Just like we saw on the S&P, we have a big move going higher here. Why is that an important clue? Well, because big moves, I don't want to buy high up here. I want to buy low. How do we buy low again? We buy low with a two-legged pullback. I want to get below that 21 EMA. Think about a measured move. I really like the idea of this 69 and a quarter area right there. That's a really sweet spot there to pick that perfect pullback for tomorrow. You get that channel coming up, of course, off the highs like that. Notice how, again, whenever it pops up and it grinds up like that, I love to draw channels like that and then pin them down around that low. That would be, now look where that channel lines up right now. It lines up right with that range. There's your breakout and your breakout pullback zone. So definitely some key levels of support down below us. Now, the NASDAQ doesn't have a range on here, right? There's no range developing yet, at least not yet here on the NASDAQ, and we don't have that two-legged pullback. So like on the S&P, I'd like to get underneath that moving average, get that two-legged pullback. I'm not gonna pick that bottom, right? Not picking that bottom. I'm gonna wait for it to pull back to that 21 EMA, let those bears try a couple times with higher highs, squeeze those stops. And then now, at this point, we don't have any range in the middle, right? There's nothing to anchor for a pendulum swing at this point. Makes sense, right? No range yet. So because of that, the target is very simple. Back up to retest the high. On the way back to that high, remember, adding to your winners, look for that separation. When I say separation, what I mean by that is that pullback will barely miss the moving average, right? Like that one right there, that one right there, that one right there. Notice the pullback, right? The pullbacks, they don't pull back all the way to 21 EMA, right? Makes sense. Okay, that's what I mean by separation. So separation, then I want to see higher high in price, below that low. That's your add-on right there on the way back up to retest that high. Failure into trap combination. And remember, like I mentioned earlier on the S&P, right? We may get a V bottom on this. We may get a two-legged pullback. It may just whoop right back up again. If it really jumps off that low, the most important thing here now is buying as low as you can, all right? The most important thing is if it V-bottoms off that low, I just don't want to chase after it. So always look around for these prior swings, and I'm going to get in below one of these prior swings. That's the goal, right? The goal is I want to buy as low as I can. I don't want to chase after it, right? That's the key, because that move going lower is going to want to retest its low. I want to buy as low as I can in that scenario. And if we're lucky, there'll be a trend line off the high, that new channel, right? That is a gorgeous, almost a winning trade, almost a guaranteed winner in these situations. And remember too, if it does make that strong shot going lower, we do oftentimes get that one to pop it back up. But because that momentum is so strong in the short term, even though we're bullish overall, oftentimes they'll hold the underbelly of that first leg and go back and retest that leg. Again, sometimes, every once in a while, that leg becomes your measuring leg. The bottom line is, in our trade room, as long as I go back and retest that low, now think about this. Anybody who sells on that pullback, where are they taking their profit targets? Probably back at this low. So sellers up here, right, become buyers down here. Again, we all know by now, this is not where you want to sell. But I'm sure I'm not the only person who did this. When I was a rookie, I was not aware of the situation. I was not looking at context. I was using indicators for every signal. So I would foolishly chase that thing lower and sell right into that low because I simply didn't know any better, and I was all over the place as a new trader. So I can almost guarantee you there'll be plenty of rookies tomorrow who wants to go back to retest that low. They will not be watching my videos. They will not be prepared mentally to avoid that trap down there. So trap them in, right? Unfortunately, every new trader needs to learn that lesson. Either find a mentor or pay your bill in the losses you're going to take there. So two-try failure. The market wants to go back to that high right away, right? So again, as it bounces back up, squeeze those stops. If we can, we'll add to our winners there with that technical trap, right? Get that separation off that moving average. Remember, in a bull market overall, a double bottom retest is a gift to the buyers here. Because what happens is you've got the sellers here, right? They're buyers of the lows. And once those rookie bears, they get stopped out, they become buyers as well. These are scenarios where everyone is buying, right? Everyone is buying. The bears who got short, they're buying down here, right? The buyers are buying because they're buying the dip, right? And once the rookie bears get stopped out, they're buyers as well. Everyone is a buyer. That's why those trades work so darn well here. Now, one final thing. What if we do go sideways here now into a trading range, right? What if we do go into a range here at some point overnight? I don't know where it'll be, right? So just be aware of that. But what if we do start going into a range here at some point overnight? What do ranges do? They love to rotate. So the amount above, the amount below, that will give us some more key support levels, right? Think about those prior swings, that channel, right? Okay, so find support levels below that range, wait for that breakout going lower, trap those bears in. Again, I like to use two tries. That way I'm not picking the exact bottom, right? I'll gladly avoid the exact bottom because it may keep going lower. I don't know how far it'll keep going. I have a good idea of where I think it will go, but I have no crystal ball for tomorrow, so I'll wait for the pullback. I'll let these rookies commit to it, squeeze their stops, and hopefully by now you know enough by now, right? That the market now wants to rotate. It wants to rotate where? Back to the other side of that range. It's that pendulum, as we would call it, in the free view course. Amount below, the amount above, that is your final target. And remember, if we blast, right, if we blast right through that pendulum swing, you know what I mean? If we run lower and then squeeze back higher, if we blast right through that pendulum swing, in my trade room, I would say, if we make a convincing break of that pendulum swing, what does that tell you? It is definitely a breakout. Now, why is it important? Because now that trading range, I'm telling you right now, you have to go back and look at this yourself. The most consistent thing, ranges, almost all of them, you can literally set your clock to a breakout pullback. Once a range breaks out, it's just a matter of time. It isn't an if, it's a when. It's almost a guarantee it will pull back to that trading range. So mark up that prior high, mark up that trading range, and then watch for that 2 two-legged pullback. Again, they're not always two-legged pullbacks, but those are the best ones. The best ones are always two legs, get underneath that moving average, get that measured move. My favorite two-legged pullbacks, by the way, are a bit more, right? 110%, 120%, 130%. The bigger they go, the better they squeeze, right? Because they rope in more bears there. So two-legged pullback, get around the prior high of that range. And again, same thing, right? Trap those bears in, squeeze those stops. The easiest money you're going to make in trading, at least in my opinion, is when you can catch traders on the wrong side of the overall momentum, right? If you can catch rookies, we assume these rookies, on the wrong side of the overall momentum, that is consistently where we find our best winning trades each week in our trade room. So breakout pullback if we roll. I wish we had more definitive information right now as far as where that range is, but that, of course, guys, is what we have our trade room, right? Tomorrow morning, we'll update our charts. We'll find the range if we see one. We'll nail down the two-legged pullback tomorrow morning. Don't forget, tomorrow morning, the place to be, 8 o'clock Eastern time. It is so much easier to make money in these markets that come out and do it with us every morning in the trade room. Guys, I'm going to put all the important links you'll need to learn more. Definitely start first on the free video classes. Everyone loves the trade examples, and most folks start making money on their own with the free stuff I offer on the website. Then come out and join us in the trade room, and we'll do it all. We'll trade it all together every morning at the opening bell. Guys, hope you learned a bunch in tonight's video. Hope you earn a bunch with all the knowledge I share tonight. And as always, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.